Brace yourself. Second correction ahead in Las Vegas, Nevada real estate. My Robnostication, which is what it sounds like. I'm prognosticating as to what's happening next. This is the future of Las Vegas real estate. So if you're at all interested in what's happening next in Las Vegas real estate and real estate in general, this is the channel for you. And while you're at it, go ahead and take a moment to subscribe to the channel. Say hello to me in the comments. What do you say? All right. See you on the other side. What's up, everybody? I am Rob Howe, a realtor here in Las Vegas, Nevada. Yeah, there's a few of us, but there's a few less of us than there used to be because volume has been so low for so long that a lot of agents are not making it in the business. But I've been in the business since 2009, so I'm not going anywhere, and I've done very well in this business, and that's why I have dedicated my YouTube channel to letting you know what I know to help you when it comes to your real estate needs, what's going to happen in Las Vegas real estate, in particular, really on the short side of things, what's going to happen. I do have some longer term thoughts as far as what's going to happen. And every month I do a Robnostication. I'm prognosticating about what's going to happen next in real estate. So thanks for joining me. Again, I'm Rob Howe with Elite Realty, and I am all about houses and you. So when it comes to what's important to you and getting you into a home or selling your home, that's what this is all about. So let's jump right into my previous Robnostication. I'm going to be always honest with you, and sometimes I don't get it exactly right. What do you know? But I think the overarching effect of my information is very correct. But let's talk about it real quick. What did I talk about last month? Well, I said it was time to sell your home. If you are a seller in Las Vegas, Nevada, I think this summer is your last chance for a little while to get the very most and make an easy sale, relatively easy sale happen. Even with low demand out there, the inventory has remained low, and that's also what I'm going to tell you about. So I said time to sell your home. The inventory was at 1.6 months of supply at the time that I said this, and I said inventory would either stay flat or go even lower, and it stayed flat. So Robnostication, ding, 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 got that one right. Maybe an easy one, but I don't know. I think a lot of people have been expecting some inventory to start showing up. On my 7-day market watch, this is where I'm going to tell you about what's happening next with inventory and my thoughts there. I said the median price would go up because the last 3 months it had actually gone up considerably. And I think that was a little surprise for some people, considering that rates were going up, but yet the median price was going up. I didn't get that right. Median price did not go up. It went down by about $2,000. So didn't get that right, but it didn't go down by a lot. And now I think that what that is starting to tell us is that it did reach a precipice. It did reach a fever pitch for our spring and into the summer months. So will we see the median price go up or down? Next month when we get the numbers, we'll get them early in the month of August. I think we're going to see the median price go down a little bit more. It may remain flat, but I think we're going to see a little drop because even though some properties are selling for more, I think the median, when we look at the median, I think it is going to go down, which, signifies again that while we have a relatively strong market for sellers to sell in because of low inventory, buyers are being met with a lot of pressure and they can't just keep upping the ante here. And as far as the months of supply, I think we are going to see months of supply go up just a little bit. So those are two Robnostications, and I'll talk a little bit more about what I'm seeing with months of supply and the inventory at the end of this video. So we may be pulling back sooner than expected for the summertime. I have been predicting that summer is going to remain strong, but I'm starting to see, a little wilting around the edges here where it's telling us a new story that's coming. And that is what I think I want to talk about the most here, which is going to be the correction that I see coming as we exit the summer into the fall and into the winter into next year. Okay, so no surprise here, but next week they're going to go up with the Fed rate, which means that interest rates are not going to get any better. Right now they're sitting around 7. If you're lucky, you can get a 7. If you're really lucky, you can get a seller to buy it down, or you have the money to buy down your rate, which isn't a bad idea at all. Get as low of a rate as possible if you're buying right now. That's definitely very important. But 7% is the norm, so it's going to stay above that. And the Fed is going to be very stubborn about this. In the past, I've certainly hoped that they would not continue to be as strong with these rate movements, but I think we're going to continue to see that they are very stubborn about it. Rates will not go down until inventory goes up. And that's not just in Las Vegas, Nevada, that's across the nation. Wherever inventory is low, they're looking at that and saying, until inventory goes up, we need rates to be higher, because otherwise they're not really getting inflation to where it needs to be. So rates won't go down until inventory goes up, but the dam will break, and that's what I'm predicting is going to happen as we go into the end of the year, especially in Las Vegas. While I don't think this will be devastating, I think it's going to be harder for sellers, because there's going to, as inventory goes up and demand is not as strong, I think that's what we're going to see, that trend continue. Big indicator. That's a big indicator. So the Fed will want to wait this one out. The week of the 24th, we're going to see a rate change, and I think there'll be one more before the end of the year, and then they'll hold it until they start really seeing that, well, the real estate market's getting on the edge. That's really what's I think is going to happen here. So again, rates are the story, and historically low volume across the country of sales closing. But the overarching story has, of course, been the inventory. So now that's where I'm going to go on to next, which is the 7-day market watch. Let's pull that up right now. Right now, we have a total of 5,200 properties exactly at the time that I pulled this up. 5,200 available properties. That's very low, and that's why we're seeing 1.6 months of supply. I do think that's going to go up, but right now it's been pretty stable. We have had, in the last 2 weeks, we went from 5,185, and then last week it was 5,208, and of course this week 5,200, so staying very, very stable. But here is where I'm starting to see some change. It's slight, but it's like, the last gasp of the summertime. I think that's what I'm starting to see here. New listings, back on market listings, and coming soon. There were 1,055 this week, 1,055. Last week there were 1,002, so we got a little uptick from there. The week before there were 895. So you're seeing a little bit of an upward trend there. What's going to even that out right now, and again, that last gasp is the under contract show, under contract no show, expired, temporarily off the market, withdrawn, conditional, and contingent upon sale. These are all designations that take property out of the buyer's hands. They're already in a buyer's hands, basically, and or they're off the market. That is at 1184. So we just have a little bit more than we did last week, which was, the number was 1,100 on the dot. The week prior, we were looking at 1,212. So that number is, kind of moving around a little bit right now. And that's why I think we're in the last gasp. And especially when we talk about this number right here, the solds. We actually went up 771 solds. That's plus 100 from the week prior, and the week prior to that was actually 827. So we had 827, dipped into the 600s, popped back up in the 700s for closings. But I do think that we're going to start to see as August goes along, that these numbers are going to start to build up a little bit. It might be just a little bit, but it is the early warning system that I think will tell us where we're at. So sellers, you better get on the stick. if you want to sell a property in Las Vegas, Nevada, I think you need to do it sooner than later. Buyers, your opportunity might be ahead, even though those rates are going to be higher as we go along here. You are going to be able to ask more of a seller and hopefully have more to choose from as far as properties available to you. So if that starts to happen, then you can start asking the seller to pay more costs for you and maybe even buy down your rate. That's kind of what I'm thinking, how sellers are going to combat things later in the year. If there is more inventory, that will be how they'll do it. I'll be paying attention to the new home market. The new builds will probably be the first to adjust and to let us know that they're giving a little bit more incentives. They let me know sometimes just by saying, hey, we give more commission to an agent, right? So that lets me know, hey, we want to get rid of stuff, or maybe having a little harder time. We really want to get your attention, agent. And obviously when a buyer gets more incentives from a builder, that tells me that I wouldn't call it desperate, but they're definitely wanting to put more into the pot to make it easier for a buyer. So I'm going to summarize real quick. I think inventory is going to slightly go up. I do think the median home price will either stay flat or go down just a little bit. We're kind of in the last dying breaths, at least for the next several months, of a better market for sellers. So, this is where I do see correction number 2 happening as we go into the end of the year and beginning of next year, just like it happened last year and the beginning of this year. That's when we dipped, and that's when things got a little shaky looking. So I think that's going to happen again. And now it's just a matter of, how that's handled, I don't think it's going to be terrible. I think Vegas overall is a strong city to be owning real estate in for the long term. Really strongly believe that. Although there may be a bit of correction off of the highs that we're seeing from this year, we may give some of that back. So anyway, I hope you enjoyed this Robnostication. Please subscribe to the channel. Say hello to me in the comments if you like. Give yourself a gold star for making it this far. And remember, I'm Rob Howe. I'm with Elite Realty. I'm all about houses and you. So when you're ready and you need somebody experienced that's going to be a realtor in Las Vegas, Nevada for a very long time, I'm your guy anytime you need me. Here's my number. Call me, email me, throw a rock through my window when you're ready. I don't care how you get a hold of me. Just get a hold of me when you're ready. Have a great day, everybody.